All right, so we are looking at departmental accounting, and at the end of our session today, we are hoping to identify the different benefits that we get from keeping what we call the departmental accounts, or keeping a record of what each department is doing. There are some key terms that we'll also want to get familiar with in terms of what um, direct expenses and indirect expenses are. Typically, you find that they are related to departments, and also, and most importantly, would have some time to look at how a departmental account looks like, by looking starting from the trading aspect all the way to the profit and loss account. Great. So when we talk about departmental accounting, the idea is that you can have one big organization with several departments. What we can do is to actually report on the entire organization as one unit. For instance, if we take the University of Ghana Business School, we can report on all the activities of the business school. But what really helps is to be able to compartmentalize the business school into different departments. And in that process, as we are accounting for each department, whether it's accounting department, finance department, marketing, public admin, MIS, and so on, there are several benefits that this gives us. And so if we are looking at organizations who have departments, the idea is that you want to be able to account for each department separately in a way that could bring some benefits to the organization. So instead of just reporting on what the entire business school is doing, or what the entire College of Humanities is doing, or what the University of Ghana itself is doing, we want to break these into smaller units so that we'll be able to account for them on their own. Now, this really is in what we call the decentralization approach. For those of you who may not know, at first, the University of Ghana, everything was done at the top. For instance, over the years, we saw that this was not helpful. So we decided to put them into colleges. So we have four main colleges now. It wasn't like this at first. Okay. So one of the ways that we see, can we mute? Okay. If I see that we are distracting, I may have to take you out. So please, let's have a smooth recording for our own benefit, please. So an organization can decide to decentralize its activities. Those days, if you were appointed, or you were asked to come for an interview at the University of Ghana, you had to go to the top to go and have an interview to be appointed as a lecturer, or as a staff. But this has been decentralized. You can have your interview at the College of Education or College of Humanities. So there are several ways that organizations try to decentralize. Instead of letting just a few people at the top do things, they break it down to make room for departments to be able to manage their own affairs. And so typically we find that for companies, it's either through the kind of products that they are manufacturing, or depending on the region, whether it's Asia or Africa or the North American, depending on what type of business the company is. So you could have companies being decentralized either through their product line or what we call their brands. Okay. Now the whole idea is to ensure that we're able to assess each person based on how well they are doing in terms of their departments. If it's a product line, for instance, if we take Unilever, for instance, There are several products that they are into: soap, cosmetics, beverages, and so on. So we want to assign responsibilities to managers. We want to break these brands into a way that we could assign roles to managers and charge them for either reducing cost or increasing profits, depending on what we expect of them. So it's a very useful way that managers use to be able to help them assess how well they are doing. And as we go through, we'll look at how this really is helpful. Okay. So the idea is that we want to be able to assess two things: how profitable are we per department, per brand, per region, okay? Or how are we able to reduce our cost? Remember, performance in accounting is not just about the profits. You should also be able to reduce cost, okay? So we are going to look at these areas in terms of reducing your cost and also increasing your profitability. And this really helps to manage the organization once we are broken it down into different departments. So just take a look at this. An example here that we have: a company has 3 departments or 3 brands or 3 product lines: clothing, housewares, electronics. Okay. How is this useful? Why do they have to bother instead of just selling? If you go to most shops by the roadside, they don't break their businesses into departments. Whatever you buy is in one container. If you're buying sachet water, they just take the money, put in a container, take the change for you. So there isn't any strategic way to demarcate even what money comes in for water, what money comes in for beverages, what money comes in for um, food items, etc. Everything is just one. Now, this could give us an idea like this. So if you look at putting all of the 3 departments for this company together: clothing, housewares, electronics. This is the picture of how the company would look like if it's all together. Look at the sales. Here we are seeing that the company is doing very well: 1.3 million Ghana cedis. It's good. But what the departmental accounting would help us to see is to really assess which of the 3 departments is contributing to this profit. Which of these departments is doing well, and which one do we need to expand or close down, okay, or support or improve? And so, moving away from this combined financial statement, we can break the combined financial statements into the 3 departments for the company. Now, when we do this, you notice that it's telling us a bit of story for the second department, which is housewares. If you look on the far right, where we have the combined, you notice that, look at the total sales. The total sales was 3 million. The cost of goods sold, if you remember this from last semester, the cost of goods sold was 1 million. Our gross profits, which is the difference, is 2 million. Look at the total expenses. The total expenses was 700,000, and that gave us the net income of 1,003. Now, if we are splitting it into these 3 departments, we are seeing that one of them is actually making a loss. But when it was combined, we couldn't tell. So we see this clearly how useful departmental accounts are. It helps us to see what each department is contributing to profit. We see that clothing is doing very well in terms of gross profit and as well as their income. So if you are the CEO and you want to motivate your managers at the end of year party, you want to give awards, you're going to use this as a guide for you. So you can use it to motivate You can use it to encourage, you can use it to boost the morale of your managers and those who are working for that department. If you look at housewares, you see that they are making a loss. And then you begin to ask questions. What happened? What is the challenge? Look at their total expenses. It's more than their gross profit. Okay. So should we close it down? Should we merge with another department? What expense can we reduce? Okay. If you look at the expenses, salaries in terms of wages is high. So should we let some people go home, or should we cut down some overtime allowances and so on? So you begin to ask a lot of questions once you see your statements broken down like this, and it's very helpful as you can see. Okay, so what we are going to be doing is just to practice how we can prepare a statement for a
And what you
department.
doing stuff across the sea, Clip? I feel show you on my thoughts you won't believe, man.
Lee, can you mute your microphone? Okay, all right. So as we can see, there are several advantages that a departmental accounts gives. I've mentioned a few. The fact that you're able to assess a department more carefully, more critically, rather than looking at it as a whole. And of course, there are questions that you're able to ask and have answers for, either to expand, either to close down, either to improve. And of course, you're also able to know what steps you should take to strengthen a particular department or otherwise, or probably just change the managers responsible for that department. There are a few more. Also, the fact that it helps us to know what our targets are. Have we been able to achieve our targets for each department? Here, for example, the University of Ghana, every department has targets. So we are able to tell whether an HOD has done well based on how well they've been able to attract um, revenue into the departments, whether they've been able to reduce cost and so on. Okay, so it's a very useful way to also create some form of competition. So everybody is doing their best to make sure that yes, overall profitability is increasing. Okay, this also helps us in terms of planning, because once we know that a particular department is not doing well, we know the steps to take to ensure that it doesn't happen in the subsequent year. And of course, as I've mentioned, we can use this to motivate, to encourage, and to serve as a way to support successful managers. There are different ways that organizations use to account for departments. First, you can just have a separate book for each department, which is one way. So each department has their own set of books that they use to record their day-to-day activities. Or we could have what we call the single set of books, and then we are recording information about each department, but in a columnar form, like what we saw earlier on. So if the departments are 2 or 3, depending on the size of the company, you can actually have one set of books where you have columns representing each department, and then you are indicating the different
I forgot the tag.
expenses. Daniela, are you with us? Let's mute, please. Okay, thank you. So we could have a single set of books for all the departments, and in there we are showing each department's activities, but in a columnar form. Okay, all right. Another important aspect of accounting for departments is what we call the allocation and apportionment of expenses. And we'll look at two of these expenses, what we call direct and indirect expenses, and how they are important when it comes to accounting for departments. When we say that an expense is direct expense, we say that they are expenses that are easily traceable, okay, or they relate to a particular department, a specific department. So, for instance, if you take Belacqua, for instance, now they've opened a very big factory around the motorway. So, if we take the production department, what we would describe as a direct expense are, for instance, the plastics that they use to manufacture the juices, the bottled water, the sachet water, etc. Okay, those are what we call direct expenses. Or if we have a production officer there, somebody who is in charge of bottling the Bell Cola or bottled water, all of these are what we describe as direct expenses. So if you are a production officer in the production department, they are in charge of making sure that they are producing the bottled water, they are producing the juice, etc. So any manager there, the salary of that manager becomes a direct expense for that department. The cost of buying the plastic, the water that they also use to manufacture the juices, etc. All of these expenses relate to the production. Okay, so when we say an expense is direct, it means that we can relate it specifically to that particular department. When we say an expense is indirect, it means that it's a shared expense. So, for instance, if we take the business school, for instance, light bill, we don't say accounting department has their own light bill and then marketing has their own light bill. No, they are expenses that are shared. If you take GCB, for instance, having their office off campus near the police station, you see that if they are paying for rent, there are several departments there, but the rent is a shared expense. Every department will be allocated a portion of that rent to pay. The same as light, the same as AC, the same as even the cleaning. Okay, so we won't have one cleaner for marketing department, one cleaner for accounting, one cleaner for OHRM and so on. The cleaners are for the entire organization. So we call these indirect expenses. These are expenses that are shared. More than one department benefits from this expense. Okay, but we have expenses that are directly assigned or allocated to a specific department. Those ones are not shared, but the indirect expenses are shared. So how do we share? How do we share the light? Accounting, finance, marketing. How do we share the light? How do we share the water bill? How do we share the AC use? How do we share the cost of the internet? Okay, so these are some expenses that come to mind because we are running the business on a departmental basis and we are accounting for the business based on the department. We need to account for how these expenses are shared. So two key things that we want to note. We say that direct expenses, because they are not shared, because they are directly attributable to a particular department, we say that they are allocated. We allocate direct expenses. We give all to accounting department. Okay, so for instance, faculty at the accounting department, all lecturers at the accounting department, the salaries of these people are what? Direct expenses. Okay. Now, when we say indirect expenses, we say that we are sharing. So we say that we are portion. Everybody will get a bit of the water bill, electricity bill, etc. So we are portion. everybody gets a share of that expense. Great. Now, our focus is on the indirect expenses because we have to share. And one of the questions that I was asking earlier is, how do we determine what each department should get? Do we just sit in our office as an accountant and just decide that accounting, because you are too big, you pay more? Or because marketing, you are small, you have very small offices, you pay less? They are what we call the basis for apportionment of indirect expenses. And it depends on the company. And sometimes companies choose what the basis is. What are we going to use to determine that you should pay this? For instance, if we all rent a room at, let's say, Pentagon, and we have to pay for the light, how do we share? Is it the number of hours I spend in the room, or the appliances that I have? Maybe I have a fridge, I have a rice cooker, I have an iron. Okay, so there must be a basis for sharing. So typically we would have the sharing done in this way. So this is an example of a company that has 3 departments: jewelry department that handles the repairs of watches, and then China and silver. And what they want to do is to allocate the cost of cleaning. So let's say they hire Zoomlion to come and clean, and the cost is 800 cedis per month.
Right, I
How do we
take it.
share it? Osei Michael, please. Osei Michael, it's coming in a recording. How do we share the 800? Bright, kindly mute. How do we share the 800? So all we are going to do is to use what we call the square feet. Okay. So for this particular business, their basis of apportionment is to use what we call the square feet. So each department has the square feet that it occupies. And so if we are having a cost of 800 cedis for cleaning, depending on the size of the department in terms of the square feet, we are going to count or measure. So look at the first column. Look at the first column. You notice that the first department, which was jewelry, had a square feet of 2004. That's quite big. Okay. The watch repair occupies just 600 of the office. And then the China and silver department occupy 1,000 square feet. So we are going to use this as a basis to share the 800. How do we do that? Okay, so 24 divided by the 4,000. We add all. Let me see whether I can get my highlighter here or my laser pointer. So we add these 3 and then divide each by the total. So 24 by this will give us our 60%. You can try that on your calculator if you have it there. 24 by the total, because we want to find the percentage that you have to pay. So first, we need everybody's square feet. We divide by the total to give us the percentage. When we take the watch and repair also, we're going to divide 600 by 4,000, which is the total. And that will give us 15%. And then we divide 1,000 by the 4,000, which will give us the 25%. You can try that and see. What are we getting? Are we getting the same percentages? So 24, 600,000. So you notice that out of the 800, we are going to share the cost of the cleaning. Jewelry is taking more space, so they are going to pay 60% of the 800, which is the 480. Okay. Watch repair they are taking 15% of the cost of cleaning. So they will pay 120 to the cleaner or to the company. And then China and silver, they are paying 25% of the 800, which amounts to 200. Okay, so what we need is the basis. This is what we are going to use to share. And this is in what? Square feet. Okay. So once we know everybody's square feet, for some, I remember in our church, we're trying to decide where we should put each class for Sundays. We had to count the number of tiles. So if some of the children are, let's say, 100 children, we count the number of tiles in a room and say that, okay, this room is big, so class 1, take this room. So there's a way that we used to share. And for some businesses, they would use the square feet to measure services like cleaning. So what we did here was 24 divided by the total. That will give us our 60%. You can multiply that by 100 to give us 60%. Then our 600 by the total to give us the 15. The 1,000 divided by the 4,000 to give us the 25. Once we get the percentages, then we multiply by the cost of cleaning. All right, we'll do a few more examples as we go on, so not to worry, but just to give us an idea about what happens in terms of the apportionment. So we said indirect expenses are shared cost, and that's what you'll be tested on. You'll be given a list of expenses and you'll be told to share based on the basis of apportionment. Direct expenses are not shared. Okay. All right. So these are some common examples for apportioning. And of course, in exams, you'll be told, you don't have to figure it out in exams. You'll be given the basis of apportionment. Yours is to find that basis in the question and then determine what each department is supposed to get based on the basis. So for instance, if you are told to use horsepower for energy, power, if it has to do with lights, you'll be told to use the number of lights. If it has to do with depreciation or insurance, you'll be told to use the asset value. If it has to do with the cost of canteen, let's say that the business school gives lunch for all students. How do we share the cost? We use the number of students or the number of employees. If it has to be rent, if we have to pay for rent at, let's say, GCB, EcoBank, for each department, customer service department, marketing department, and so on, we use the floor area or the square feet. Okay, so there are several of them. All of these relate to sales. If you look at it, salesman salary, carriage outwards, discount allowed, commission, bad debts, provision for bad debts, all of these has to do with sales. So we can use the sales of each department as a basis to share. Okay. All right. So as I mentioned, you don't have to worry about memorizing all of this at this level because you'll be given the basis for you to use that to compute how the sharing will be done. Now, having looked at the basis, as we are familiar with the accounts for a trader, what we'll be drawing from that experience is how to account for the gross profit. So if you're preparing a departmental account, depending on the type of company, as we mentioned last semester, we can have companies that are providing just services. Some companies also buy and resell. So if the company is buying and resell, then we need to account for their gross profit. Okay. And for this particular topic, our focus will be on companies who buy and resell. And so it's important that we go through their gross profit. How do they arrive at their gross profit? If you remember when we were looking at this, we said that if you have your selling price minus your cost price, it will give you your gross profits. Okay. Now, this is your first profit. Without your gross profit, you can buy your fuel. You can't buy your pizza. You can't buy your shoes. You can't buy your dresses. You can't pay for your rent. So that's where expenses come in. So every business that buys and resells is interested in their gross profit before expenses. After that, we get our net income or our net profits. Okay, so it's important that we go over the ways that we use to derive our gross profits. Now, this part that is expenses is where we are going to do the apportionment or the allocation. So here we could have the direct expenses here or the indirect expenses. So we'll be sharing when we get to this side. So I want you to have this in mind as you work on departmental accounts. Your gross profit is key, and we have the format here. Once you get your slide, you can look at it as a way to help you remember. You always need your sales, your net sales.
So I'll see you next time. All right, take care. All right.
Bless, bless, bless. Sales, your net sales. And then you get your cost of goods available for sale. Then you take out your closing stock to give you your cost of goods sold. So you notice A minus B. Where is A? A is here. That's your sales minus your cost to give you your gross profit. Okay. So your A minus your B will give you your gross profit. The apportionment comes in after the gross profit. So here. So if you look at the format, after you got your gross profit, then your expenses. If there are other income, you record that here. Okay. Your expenses here is what you're going to do in terms of the apportionment, where your indirect expenses will be. Okay. All right. So it's about knowing what you want. Where am I supposed to get to when it comes to departmental account? I'm supposed to show the company's activities in terms of their gross profits for each department, because I'm accounting for departments. And then I would show information about direct expenses. So if there are specific people for specific departments who are doing specific things, those ones are direct expenses. If they are shared expenses, I need the basis of apportionment to be able to share. Once I do that, I can arrive at my total expenses, and then I subtract that from my gross profit to give me my net profit. So just to give us some few steps as we work on preparing departmental accounts, these are just guides. What do we need? We need to know information about the expenses. That's key. Everything about the departmental accounts relates to your expenses. Of course, there are a few more details that we'll look at shortly, but you need to know whether they are direct expenses. Sometimes we don't have direct expenses, so you need to check. some of the expenses you are not sharing. You just give it to each department. Okay. If you have to share, then you need your basis for apportionment. And now, if you are preparing your financial statements, you need information about your net sales, about your cost of goods sold, about your gross profits, and of course, your expenses. So these are things that you should have in mind as you work around departmental accounts. So let's look at this example. Let's look at this example, and then we would continue. So we have information about a company who has 2 departments, black and navy. It could be dresses, it could be shoes. Black and navy could go with anything. All right, so let's ask the first question. What would be the gross profits? Maybe let's start with that. Please, if you are with us, kindly pull out a sheet of paper, pull out your exercise book. Let's do this together. Pull out your calculator, your pen, and let's do this together. Are we ready? Hello.
Yeah.
Okay. All right. So what will be the gross profits? How do we get the gross profits? What is the formula for getting gross profits? It's not here, but I'm asking that before we proceed. How do we get gross profits? You can also put your answer in the chat if you don't want us to hear your voice. How do we get gross profits? You can also raise your hand. Ellen, do you want to share with us?
Yes, mistress.
Please go ahead.
Okay, mistress, please. So it's the sales less the cost of goods sold.
Great. So we are doing that for each department, isn't it?
Yes.
So black is here, and then navy. Black and navy. So we have sales for black, which was the 200. And then we have 400. I'm not writing all the figures because of my pointer, so you can put your 3 zeros there. And then we already have cost of goods sold. You notice this one, we've already calculated it. So we just put it there. Cost of goods sold. So this is 100. And then this is 159. Hey, look at my 5. Okay. So what are we having for gross profit for black? Ellen, are you able to?
100,000.
Okay, how about navy? What are we getting for navy?
241,000.
2?
41,000.
Okay. All right. Great. Now, that's not all. What do we do after gross profits? We need our expenses because our focus is on net income. So the question is asking us to compute for what? The income. What do we do? How do we get information about the net income? We need expenses, isn't it? And expenses is here. Expenses come before our net income, right? Okay, so how do we get our expense? Let's look at the extra. We have one expense here, salary. Okay, so let's look at what is being said here. Who will read for us? Just so I know I'm not alone here. Who will read the instructions for us? Who is reading? I should call names. Let me see whether I have a friend here. Ruth, Priscilla, oh, Priscilla, read for us. Priscilla is here. Ruth, you can also read. Or you give us the answer. Priscilla, read for us.
Okay. The Black Division occupies 20,000 square feet in the plant. The Navy Division occupies 30,000 square feet. Rent is an indirect expense and is allocated based on square footage. Rent expense for the year was 50,000. Compute departmental income for the Black and Navy divisions, respectively.
Okay, thank you. So, what do we make of this? Yes, anyone to tell us what is being said and what we are to do if we've been following the discussion so far? Any volunteer? Hello. What are we told? Yes, Derek, please go ahead.
Madam, and so just as the question says, we should allocate the rent expenses based on the square footage. We'll take the square for the Black Division and the Navy Division, which is 20,000 and 30,000 respectively. And so we share the rent amount based on the figures we've been given for Black Division and then the Navy. So it will be a ratio of 20,000 to 30,000. Then we share the amount for them.
That's all. Thank you, Derek. So can we try that? Which of the answers would it be? Okay, so let's do the sharing first before we look at the net income. How do we share? Derek has told us. Let's try that. Where's my eraser? Let's try that. Let's share for each department. What are we sharing? We are sharing rent. What do you notice about the salary expense compared to the rent expense? What do you notice? Which one is direct? Which one is indirect? Hello?
Aye.
Yes. Which one is direct? Which one is indirect? Which one is a direct expense? We see that the salary expense, we're not given any information as to sharing. So we treat that as a direct expense. It means that Black Division salary, there's a manager there. That manager's salary is 28. No sharing. Navy also has their manager. The manager's salary is 48. No sharing. Okay? But when it comes to rent, we have to share. How are we sharing? We are sharing based on what? The square footage. How much space do you occupy? Okay? So the departments were 2B and N. And we're told that B occupies what? 20,000 square foot. S cube. And then N occupies 30,000. And they're supposed to share how much? They're supposed to pay for the 50,000 rent. The rent is what? 50,000. So how do we share? So B is going to get, so we add these two. The total square feet is what? 50,000. So this plus this will give us 50. Okay, the total square foot is 50. So B is going to have what? B's own is 20 out of what? The 50 square foot times the rent, which is 50,000. Are we okay? So B is going to have what? 20. I've cancelled out all the zeros because of my pointer. Okay, so 20 out of 50, this is the square feet, times the rent. How much was the rent? 50,000. What does that give us for B? What do we get for B? In terms of how much rent they have to pay. Hello?
Madam,
Hi.
20,000.
20,000.
Oh, mind me. Oh, you're confused.
20,000.
20,000.
Hey. So B is paying how much? 20,000, isn't it? Out of this
Yes.
50, okay, B is going to pay 20,000. All right, and how about N? We have to work it out. We can see it clearly, but we have to work it out to prove. You know, maths, you have to prove. So this is 30 out of the 50 square feet, the area. Before you multiply by what? The rent. The rent was what? 50. What do we get for Navy? 30,000, isn't it? My space is finished. So black is going to pay 20,000. Navy will pay what? 30,000 of the rent. Okay. So I can add that here. Rent. I've calculated it. Black is paying 20. 20. And then Navy will pay 30. Finished. Now, once I do the apportionment, I can find my net income. Can we try the net income? What's the correct answer for the net income? Remember, the question is asking us for net income. But look at the steps we have to go through. How do we get the net income? We already calculated for our gross profit, isn't it? So our sales for 200, I'm doing for black, so you do for navy. Sales, my cost of goods sold was 100. I get gross profit of 100. This is my gross profit. And then I take out my expenses. My first expenses was salary. Remember we said salary, we are not sharing. Salary was 28. Hey, where's my pointer? My pointer is not pointing. Okay. So this will give us, sorry, we are not done. Let's add the other expense before our line. So salary is 28. And then we have our rent, which we have shared. Okay. We have our rent. Our rent for B is what? 20. So this is B. I hope you are doing the other one for N. So I'm going to have my net profits or my net income. I'll subtract 52. Thank you. 52. So you see, for departmental accounts, the key thing is to do your sharing well. If you don't do your sharing well, if you don't share well, to affect your net income. Okay, so you need to share well. This is bracket 2, not 1. Anyone who has done for Navy, what's the answer? I'm waiting for the answer.
163.
163.
Hey, did you do it or you just chose the A?
We did it.
Okay, all right, that's good. 163. All right, great. So once we are able to do the sharing, remember some are direct, some are indirect. Once we share correctly based on the basis of apportionment given, we are good to go. All right. So that's our workings here done beautifully for us. I'll share the slides with you so you can look at it again if you are not sure. All right. Another aspect of departmental accounts before we get into some more practice examples. I'll get into Excel. We'll do one full question, and then we'll end. So there are several types of departmental accounts. For some departments, they are on their own. They don't share with anybody in terms of the activities that they do, apart from the indirect expenses. But for some departments, there needs to be what we call transfers. So we usually have what we call interdepartmental transfers. So one department may need a raw material from department A to complete their manufacturing process for department B. And so there's a need to bargain on the price. So for instance, if Belacqua, I like to use Belacqua as an example for us. Or let's just use the University of Ghana, for instance. The University of Ghana currently, if the accounting department wants to hold a program at, let's say, the City Conference Center, it's not free. You have to go and pay for the auditorium. Okay. If we compare that price to, let's say, going to maybe an event center at East Legon, the Underbridge, very expensive. Okay, so there are what we call departmental transfers from one department to another, and it comes at a fee. Okay, so if the City Conference Center is, for instance, renting the place to the accounting department, how much should the accounting department pay for compared to, let's say, an outside event center? You need to look at all of the cost implications. But what happens is that once it's between two departments, we say that the departments are interdependent. And there's what we call transfer pricing. Because I'm transferring things to you that you don't have, it's not free. I remember the first time I got to know that even in the university, you have to go and pay for space, one department to another. I was like, really? But we are in the same school. Said no, they have gone to look for their money to build their center. They need to keep the place, so that's why they have to charge. Okay, so we call this kind of pricing transfer pricing, and there are different ways that departments use to charge these transfer price, and we'll look at them shortly. So typically when we say a transfer price, as I've explained, is between two departments or two product lines through, it could be between maybe an Asian department or an African department. It could be once they're of the same company, these transfers happen. And the most important thing is that we are accounting for the pricing and how it's influencing profits, not just for the department, but also for the company as a whole. Okay. Now, the transfers could be done in 3 ways. We could look at it in terms of what we call the transfer based on the cost or the market price, or what we call cost plus a percentage of profit. Okay, so if you are coming to me, we are in the same office and the same department. Sorry, we are in the same company, but we are in different departments, and you need something from my department. It's not free. If I'm charging you, I can charge you based on how much I bought it. So if I bought it for 10,000, I'll give it to you for 10,000. Okay, that's what we call transfer based on cost. So the same cost I incur in buying, that's the same cost I transfer to you in terms of the price. I can also transfer to you based on the market price. So here I'm not going to use how much I purchased it. If I purchase the chairs for, let's say you want to do your graduation for level 400 students and you need chairs, canopies. I have some accounting departments. We have our own chairs, our own canopies, our own flowers, decor, and so on. I'm not going to give it to you at the cost price. I'm going to give it to you at the market price. So if you go to, let's say, what are some of the popular events places? Let's say they are going to give it to you at a higher price. You have to weigh the cost implications. You're going to take a transport, go outside, bring it here. Depends if their price is cheaper than mine. But I can give it to you at that same price that you would have purchased it if that someone else was a customer. Okay, so if somebody from, let's say, UPSA is coming to hire the chairs and the canopies, I'll give it to them at the market price. You also, even though you're in the finance department, you also buy it or hire the chairs at that same price. Okay, once I give it to you at the market price, it means I'm going to get profits. We'll look at some examples soon. So I can transfer to another department on the same cost that I bought it, or on the market price, that is what customers are going to acquire it for or buy it for. You and UPSA, you pay the same price. Okay. Or I can also use what we call cost plus a percentage of profits. Let me reshare. Sorry about that. I hope we have not lost our recording. Where is it? Where is it? Okay, it's here. Please let me know if you can see. Can you see my screen?
Yes, mistress.
Okay. All right. So I can also transfer based on what we call cost plus a percentage of profits. So if I buy it for, let's say, 10,000, I'm going to put a small percentage on that 10,000 and then charge you with it. That's different from the market price. Okay, so I can buy it for 10,000, charge you, let's say, 10% of the 10,000 or 20% of the 10,000, and then you pay. Okay. So let's look at these. I have 3 scenarios here to reflect each of them. So here's the example I was sharing with you earlier based on cost. You're coming for chairs, canopies. I got it for 10,000. I'm transferring it to you for 10,000. So I don't make any profit. Okay, cost to cost. So in my books, I'm going to record that I've transferred the goods to you. You are going to record it as part of your purchases. Okay. All right. When we look at the market price, as I mentioned earlier, is the same price that would have sold to customers outside. Okay, so my cost will be 10,000, but people who are coming from outside, UPSA, Academic City, Knatsford University, and so on, they are going to have the chairs, the canopies for 15,000, and so are you as a department of finance in the business school. Okay, here we see that I'm making profit here because I got it for 10,000. I'm transferring it to you at what? 5,000. Okay, so there's a profit here. All right, so departments can make profits, but as we'll look shortly, we'll see that even though a department can make profits, it doesn't reflect the overall company's profit, and I'll explain why that is so soon. And then the last one is what we describe as cost plus a percentage of profits. Usually these things are helpful because when we get to manufacturing accounts, we'll meet these transfers again. So it's important that we go through it well. So when we say cost plus a percentage of profit, what we are saying is that we have the cost of acquiring our items, our goods, whether here in this case, our chairs and our canopies for hiring. And what we are saying is that the cost was 10,000. If I want to transfer to anyone from the finance department, I'm going to add 20% of the cost. And here we call that markup. 20% of the cost. Another term for that is what? Markup. You'll be told this in the question. So what you do is you multiply that percentage by the cost, and then you add that to the cost to give you the transfer price. So what is the transfer price here? It's 12,000. How did I get the 12,000? 20% of the cost. I add that to the cost to give me the transfer price. So you see, I'm also making profit here because it's cost plus a percentage of profit. Okay. So my profit that I'm expecting to make is what? 12,000. So cost plus markup. Markup is always on the cost. We also have what we call margin. Okay. Margin is usually on your sales. So if I'm transferring these three bases of transfer price could be used, and it depends really on the department and what sort of agreements they have or what policy they have. You can transfer based on the cost. No profit is realized or recognized in this case. You can transfer based on the market price, or you can transfer based on the cost plus a percentage of profits. Now, what happens is that once there's profit that you are getting as accounting departments, anytime some of the products or the goods are not sold, we say something happens, and that is described as an unrealized profit. So anytime we transfer goods to another department, so let's say that finance has come to purchase items from accounting department at, let's say, market price or cost plus a percentage, but they didn't sell all. If you remember last semester, we said that profits is only recognized on what you have sold. So if you have not sold all of your items, you have to take that out. And that is what we refer to as unrealized profit. You have not sold everything that you received as transfer. Okay, you purchased items from accounting department to go and sell, or to add your products to manufacture and go and sell. You have not finished selling. Any leftover from that is recorded as unrealized profits. And what we do in accounting is that anytime you have not realized profits, you have to take it out of your books. You have to take it out as part of items that you have not yet sold or revenue that you have not yet earned, because we don't show income that is incomplete. Income that you record should be on only items that you have sold and you have earned revenue on. So even though the department would transfer to you as, let's say, department B, you have received the items, goods have not yet been fully sold, or you have leftovers, or you have closing stock. Whatever is left that has not yet been sold, or you have not finished making sales on, you would have to take that portion out and record that as unrealized profits, which you subtract from your gross profits to give you your net income. Okay, so we'll look at some example how to treat items that we have not yet sold, even though we have received them from one department or the other. If we have not sold it, what do we do? Do we show all of it as income that we have realized? No, we need to eliminate unrealized profit. So you have to calculate which part of the transfer of goods is not yet sold, and then you take that out. Whatever is left becomes your real net income. Okay. So issues around departmental accounts, two key things for us to note: how to apportion your expenses or allocate your expenses, and then issues around unrealized profit. If you have any question around departmental accounting, these two areas are what you'll be tested on: how to account for unrealized profits, how to account for indirect expenses, and of course, how to prepare your departmental income statements. Any question up to this point? Otherwise, we'll move into our full question practice. I'm going to go into Excel now to take you through one example, and then I'm sure you would pick up the rest with Manasseh during tutorials. Any questions so far? Hey, no question. Hello?
Yes, madam.
Madam,
Yes. Or you are thinking about it? You
Madam,
go and
please can you go
yes.
over the slides before this?
Okay. This one. Or I should go back again.
This one.
Okay. So we are saying that sometimes a department can transfer to another department using what we call cost plus a percentage of profits. What that means is that you calculate the cost. Let's say you are department A and I am department B. I'm coming to you for some items to go and sell. Now you acquire the items for 10,000 cedis, okay? You don't want to sell it to me for 10,000, or you don't want to give me a transfer price of 10,000, because the CEO is going to check whether you are profitable, whether you are doing well as a manager. We are in the same same company, but you are in department A, I'm in department B. They're going to assess if you don't make profits, they will not pay you your end of year allowance. So if you want to make profits as department A, so when you buy your items and it costs you 10,000, you don't think it makes sense to give it to me also for 10,000. So you will add something small to it so that you will get your profit. How do you add? Okay. Now what we say is that you can use what we call a percentage on the cost. And usually these percentages is something that you use based on your experience or your discretion. Okay, you wouldn't be asked to calculate for the 20%. You'll be told. So what you do is to calculate the 20% on the cost that you incur. So 20% of the 10,000, that will give you what? 2,000. So you add the 2,000 to the 10,000 and then you transfer that to me. If it's bottled water that I came to buy, if it's extra A4 sheets that I came for your office, if it's extra markers I came for, whatever it is, it's not coming to me for free. I have to pay 12,000, but you will make a profit of 2,000. Okay, so you're going to show in your departmental accounts, your departmental income statement, that you've made a profit of what? 2,000 when you're preparing your accounts. So this approach is what we call the cost plus the percentage of profits. It's just adding some amount to the cost before you transfer to the other department. I hope that's clearer for you. I don't know who asked. Is it Ellen
Yes, please. Thank you.
or is Priscilla? Okay. All right.
Madam, please, yes.
Okay. So let me go to Excel. There are two questions. I want us to finish one. Then if we are not able to finish the second question, I can ask Manasseh to take you through during the tutorial session. So let me share my Excel. Where's my Excel? Okay, it's here. Oh, it's recording. Okay. So Excel. All right. I started creating it so that we won't have to spend too much time. Priscilla, let me put this in the WhatsApp for you so that you can follow. I don't know whether you have it already, but let me just share on WhatsApp with you so that you can follow as we go on. This is to Priscilla. Okay. Okay. So I've shared with Priscilla. I'm sure she'll put it on the page for you so you can just open it and follow. I've pasted it here, but I know that it will be small. Okay, can we see my screen? Have you received the question?
Yes, mistress.
Okay, are we ready? Should we proceed?
Yes, please.
Yes,
Yes.
mistress.
Okay. So, like we always do, it's important to begin with the three W's. Who are we reporting to? We noticed that some of you missed marks for this. So remember, who are you reporting for? What are you accounting for? And the year or the period that you are reporting for. Okay. So if you notice from the question which I have on the right here, our company was Sakura. Sakura had 3 departments. Jewelry, hairdressing, and clothing. So let's look through the question carefully. This is one of the straightforward ones that you can have, just testing our understanding on the basis of apportionment. So notice that we had inventory of goods or materials at the beginning of the year, 1st January 2021. Purchases, inventory at the end of the year, 31st December 2021. Then we have sales and work done for each. And then we have wages of assistants in each department. And then we have further information telling us that the following expenses cannot be traced to any particular product. So what are they? If they cannot be traced, it means they are indirect expenses. We have to share them. So we are sharing rent, we are sharing admin, we are sharing air conditioning, we are sharing general expenses. They cannot be traced. If they can be traced, then they are direct. So they cannot be traced. So we are going to share. How are we going to share? You've told us. So if you look at the notes beneath that, it says it is decided to apportion the cost of rent together with air conditioning and lighting in accordance with the floor space occupied by each department. Okay. So rents, what we are being told is that rent, air conditioning, and then we are also being told that administration expenses and general expenses are to be split in the ratio of sales and work done. When we take rent and air conditioning, we are told that they were taken up in the ratio of 1/5, half, and 3/10. So that's how we are going to share it. Okay. So let me move to the right a bit. And I'm going to show my workings here. So it's important. Hey, let me increase the fonts.
With our class, so I see them come post some assignments for the group. So I started rejoining the class. I don't say at least make above the assignment before I left the class.
You want to barb the assignment? Whose microphone is that? Who is that? It will come in the video when we put it on YouTube. It will be there. Okay, workings. We are going to share. Okay. So we are sharing rent. Rent is 8,002. And we are told that it is decided to apportion the cost of rent and air conditioning, okay, in accordance with the floor space. And we're told that the floor space was what? Floor space. Floor space. So Jewelry is having how much? We said 1/5. Jewelry is 1/5. Let me put that here. Then hairdressing is, oh, that's giving me first May. Hairdressing is half. And then clothing. Remember, we are sharing. They've given us how we should share. Okay. They said we should share based on floor space occupied. We are doing that for rent. We're also doing that for air conditioning. Also using floor space. So jewelry is also 1/5. Hairdressing is also half. And then clothing is 3/5. So from the question, these two, we are using the floor space. Okay. And then we go to admin. It said, if you look at the last line, we said administration and general are to be split in the ratio of sales and work done. So administration, we use sales. The basis of apportionment is sales. Basis of apportionment. All these are in the question, as I mentioned to you. Then general expenses also sales. Okay. All right. So we are going to do that. We are going to do our calculations. So once we get the calculations for these indirect expenses, we can start preparing our departmental accounts. Okay. All right. So once we've noted these down, let's go back to our statements and start. When we get to the expenses, we can work that out. Some would like to do the workings and come back. Sometimes you also have to look at your time. If you want to start and then be working alongside, that also is helpful, whichever one works for you. So I'm going to begin with my sales. What do I need here? I need my gross profit. Remember, I'm preparing income statement. So I need my gross profit. How do I get my gross profit? I need my sales, my cost of sales, and then I subtract my cost of sales from my sales to give me my gross profit. So what's the sales for the first department? We can get it from the question here. If you look towards the right, sales and work done for the first department is 180. So I'll put that here, 180,000. Hairdressing is 90,000. Clothing, I'm going to move away slightly, 270. I hope you can see it from your question too. Okay. Let me move this away a bit. And then this one also. Okay. All right. So this is 270. The space is small. All right. So I have my sales there. I don't have returns, so I can move on. Now I want my less cost of goods sold. How do I get that? If you remember, our opening stock, we'll add our purchases. Then it will give us our cost of goods available for sale. Then we take out our closing stock. Remember, anything that we have not sold, we need to take it out to give us the true profit. If you add your stock that you have not sold, it's what we call falsification. You are not giving us the true reflection of what has happened. You have not sold it, so take it out. So let's do you are going to do this for each department. Okay, you're going to do this for each department. All right, so your opening stock, where do we get this figure for? If you look at the question, my opening stock is what? 20,000 for department jewelry. Okay, 20,000. What's that for hairdressing? What's the opening stock for hairdressing? Anyone?
15,000.
How about clothing?
30,000.
Okay. Then we add our purchases. What's our purchases for jewelry?
110,000.
Great. So you notice I'm in column B, just so I can do my additions here before I bring them. Okay. All right. So I add this. Let's do that for hairdressing as well. What's the purchases for hairdressing?
30,000.
30,000. Just a minute. Let me put the columns there so we can see the. So this is 30. And then how about clothing purchases?
150,000.
150. All right. So I have my opening stock and my purchases. So I add to give me my cost of goods sold. Excel will help me do it fast. So I can move. Where's my line? Where's my line? This will be bottom. Let's see. Okay. So I have my cost of goods available, isn't it? Very important. I need this figure. I need this figure. I need this figure. What's my closing stock? I need to take out what I've not sold. What's my closing stock for jewelry?
30,000.
30,000. How about hairdressing?
25,000.
How about clothing?
40,000.
1,000.
Great. Once I get this, I can find my cost. So this is my cost of goods sold. Okay. I'm going to move it here so that I can subtract. Remember, this is supposed to give me my gross profit. Okay. So I'm going to move it here. So I'm going to put in my Excel formula. You can do it on your calculator. I'm using formula. So this is my cost of goods sold. So 130 minus this will give me that. And then 45 minus this will give me that. Then 180 minus this will give me that. I can. Great. So this is my cost of goods sold. Okay. Are we okay? Are we following? I can get my gross profit now. How do I get my gross profit? I have my cost. My cost is 20. 140, 100. Gross profit is what? 180 minus costs. 90 minus costs. 270 minus costs. So that's my profit. What color should I use? I should use green. Okay. So I have my gross profit, but I'm not done. I'm going to now take out my expenses. Okay. So my expenses, I check here. Remember, we said some of the expenses are direct, some are what? Indirect. Do you see any direct expense? Hello? Do we see any direct expense? Any expense that we are not sharing?
Yes, the
Yes,
wages side.
wages of assistants in each
Wages of
department.
assistants in each department. How do we know? We're not told to share them because we don't even have any basis for sharing them. If you look at the additional notes, there was nothing mentioned of wages. Okay, so we just put their figure there. So wages for each department. Wages for each department. This expense, I'm going to put it here. Okay, if there are many, I can put them here and bring the total here. Same thing. So I think we have about 4, 5 expenses. So I'm going to record them in the first column, add them and bring the total. So wages for jewelry was what? What's the figure? 28. What's that for hairdressing?
50,000.
50,000.
How about clothing?
60,000.
Great. So they're in the first column. So I'm done with the direct expense. Now I'm going to the indirect. I don't have to write indirect expense here. I know that I'm going to share. So I just go straight. Rent. So I'm going to share for everybody. The rent was 8.2. Okay. So how do I share? We're told in the question that rent should be what? Do you remember? 1/5, half, and what? 3/10. Okay. So you can do it separately as workings. You can also show it here. So let me do both for you to see. So rent, I'm going to show 1/5 of 8.2. What does that give me? Let's calculate that. Then the next one is what? Half. Half of 8.2. And then 3/10 of 8.2. Hello? Are we there?
Yes,
Hello?
madam.
Should I go over? Are we okay?
Yes, madam.
Okay. Let me use green. Hey, these colors are okay. All right. So this is for who? The 1/5 was for who? The 1/5. Which department is it for? Hello? 1/5 was for which department from the question? They said respectively. Okay, so based on the department, we have hairdressing, we have jewelry first, hairdressing and clothing. So in that order. So 1/5 will go for jewelry, hairdressing, and then clothing. So what do we get for that? 1/5 of A2. What does that give us? Hello, can you hear me?
Yes, madam.
Yes.
What does that give us for the first department? I want to hear your voice.
1640.
1640.
1640.
Okay,
Yes.
so
Yeah.
let's do that for hairdressing as well. So this one was red so that we can track. Hairdressing is blue. That one is half. What do we get?
4100.
4100.
Okay, and then for clothing,
2460.
so if you add the 3, you should get A2. Okay. All right. As I said, you can do this separately as workings and come and put your final figures here. But I want us to do it here for us to see. And then once we master, we can do it and come and paste it. The next one is what? Air conditioning. We're told rent and air conditioning are using the same, isn't it? So the same basis of apportionment. Okay, so the figure will change. What's the figure for air conditioning? What's the figure?
6000.
6,000. Okay. How about, okay, so the same for all 6,000, then 6,000. Okay. So let's calculate that for the first department, jewelry, 1/5 of that, and then hairdressing, half of that, and then clothing, 3/10 of that. What do we get for the first one? Air conditioning. We are sharing it.
1200.
1,002 for jewelry. How about what's the name? Hairdressing.
3000.
2000.
3,000. And then how about clothing?
1800.
So just like we did, if you add all these two, you should get the 6,000. Okay. All right. And then we have 2 more expenses to share. Admin and what? General. Admin expenses. We're supposed to share it based on what? Sales. Do you remember? Let's look at the question. So admin and general expenses are to be shared in the ratio of sales and work done. Okay. So if you come here, so whose microphone, please? Great. So let's do for admin first. We are using sales, okay? Now our sales was what? Jewelry was 180 if you look at it. Jewelry is 180. We are using sales. 180. And then we have hairdressing. Are we seeing where the 180 is coming from? From the sales figure. Your hairdressing is 90. And then clothing is 270. So we add all of this to give us 540. This is the total sales. Okay, so we are going to share. Okay, so jewelry is going to have let me move this here. Jewelry is going to have 180 divided by 540. Okay, let me move the commas. Then you multiply it by 100. 100%. Okay, so the total cost of admin is what? Do you remember? Admin is 48,000 from here. So we are going to share the 48. So we need a basis for sharing. And we are using the sales as a basis. Okay. So remember, they are all going to share 48,000. Okay. So this will also be 90 divided by the total sales. Then you multiply by 100. Then you do the same for the next department, which is clothing. We divide by 540. Then you multiply by 100. So anytime you are apportioning, get the total, divide each department by the total, multiply by 100 to give you the percentage. Then you can share. Use it to do the share. Okay. All right. What are we getting for the first one? Can do it here. So let me put the 48 in here so that we remember 48, 48, 48. So we are multiplying all this by 48. So let's say this is A and this is B. So A times B. So whatever you get here, you multiply by B to give you your answer. So I'm going to do 180 by, I'll do the first one, then you tell me the rest. Times 48. Says my formula is not correct. Let me put brackets here. Okay. Didn't pick this one. Wants me to do it one by one. Okay. So what did we get for the first one? I was using my shortcut, it didn't work. Divided by 540. Multiply by 48. 8,000. Is somebody getting the same figure as mine? Or you're waiting for my answer? Okay. So I can add all and check whether it's 48. Yes. So I've shared it. So this is for administration. Okay. We do the same for general expenses. Just that the figure will change for general expenses. I'll copy this one. Paste. I'll copy this one too, because I'm using sales. It said I should use the sales to share. That's what the question says. So it's the same thing. I'm going to share using the same 180 of this. So what is going to change is the 48. Okay. So this will also not change. But the general expenses figure is what will change. So this one will be Ghana cedi here. All right. So what's the figure for general expenses, which I'm going to share? What's the figure? What's the figure for general expenses, which I'm sharing? You can look at it from the question. What's the figure, please? Hello?
Yeah, it's 2,400.
2,400.
It's 24. Okay. So I'm sharing 24. I'm writing it there. Not that it's for all of them, but I'm going to share. So this one times this, okay? So 180 divided by this. I can also do it and put it there so that I just copy. But exams, they have to show. This by this times 24. Then I do my 27 by this times 24. Then I check whether the total is the same. 24. So I'm sorted. So I've shared, this is what I need for general expenses. For admin, this is what I need. So when I go to my statements, keep this in mind for me. Keep this one and keep this one. I'm going to copy. I can even copy. Let me see. So that I don't have to come back. This. Okay. So I'm back here. Admin expenses. I'm going to share. Oof. Let me copy and paste. Don't mind Excel. Let me paste it. Huh. So this one was for who? You are, isn't it? 8,000 was for hairdressing. And this one was for clothing. Correct? And then I do general. You remember the figures for general? I should go and copy and come. Where is general? General, they say you are here. Let's go. I'll copy and come and paste. I'll come and paste it here. Let me paste and copy. So general, 800 was for jewelry, 400 was for, and then whose microphone? Okay. So let's check whether all our expenses are done. And we have not left anything. We've done rent, we've done admin, we've done air condition, we've done general. Let's check. Admin, general, air conditioning, rent. We've done all the 4. 1, 2, 3, 4. Great. And let's go back to the top. Any expense we have left. We've done wages. we've recorded sales, we've done closing inventory, we've done purchases, we've done opening inventory. So we are set. We can now find our net income. How do we get our net income? So I've reduced it small so we can see everything. Okay, so remember we have our gross profit here. Okay, let me give it some color. Gross profit is up here. We've done that already. We're doing our expenses. Our expenses, we had wages, rent, air conditioning, and then these two. So I'm going to add all my expenses. Add all my expenses for the first one, 47. I want to move it here. Okay, so that I can subtract under the gross profit. Let me go back small. I hope you can see. So my gross and my expenses. So this will be what? Total expenses. Total expenses. This is number one. I'm going to add for hairdressing. I don't want it here. I want it to come here so that I can see. Total. Then I do for clothing. My thing doesn't want to move. Okay, let me pull it away from here. Okay. So I add all my expenses for clothing. I don't want it here. I want it to come out and stand out. Why are we doing all this? Just to make it clear so that your manager or your CEO can see. Doesn't have to be looking through and be finding expenses. Where is total expenses? I can't see. So we bring it out explicitly so we see it clearly. So I have my expenses for jewelry, for hairdressing, and for clothing. I have my gross profits for all three. Now I can determine my net profits. How do I get my net profits? Let me go down a bit. Okay, it's getting smaller. So we can see all of it at a go. Okay, so my net profit is what? Let me put it, let me give this A. A, and this will be B. So net profit is what? A minus B. If you're going through, I'll share the Excel sheet with you also so you can have it. A minus B. I do the same for this one. A minus B. A minus B. I want to underline it nicely. And then I'm done. Okay, so as I said, you can actually do all this as part of your workings and come and just put them here. Okay, if you don't want to forget anything too, I'm sure at this level you'll be pardoned, but the best is to work it out here. Come and put the totals here. Okay, all right, any question? I think our time is up. You can try the second question. I'll share a few more with Manasseh to help you look also at the unrealized profit. I think we'll meet it again in manufacturing account. So that one we can have a full question on that as well. So it's important to go over the trading account because we'll meet it again in manufacturing accounts. Okay, so please how to get the gross profit, how to account for cost of goods sold, cost of goods available. Please go through it carefully. We'll also be doing sharing when we get to manufacturing accounts. Okay, so let's try the second example in the worksheet using the steps here, and I'm sure we will be fine. Any question? Otherwise, we'll end it here for now. As I mentioned, let me save this right away. I'll share this with you so that you can go through. I think I pasted the second example here. So I'll share the Excel sheet with you. You can do it in Excel as well. Also to help you get familiar with Excel if you are not too used to it. You can try that here. So the question is here. You can be doing that alongside. Okay. All right. So on that note, thank you all for coming. Thank you for staying on for 2 hours, 20 minutes. And I'll share the video and the work and the Excel with you to go over. I wish you all the best and see you soon for our next meeting. Bye-bye for now.
Bye.
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 Bye bye.
Ah.